Hey, what is good, everybody? I pray that you all are doing very, very well. So I'm getting everything set up for the live stream. It's been a while since I've done a live stream, mainly because for me personally, you guys, I just took a hiatus a little bit last year, and I really wanted to focus on the clients who were in my group. I wanted to help them pass prop firm challenges. I wanted to help them just get better at trading, building their own watch list, just really evolving them. And that took a lot of trial and error and trying a lot of things out. And also went through a few personal things in life as well. And I just said, you know what? Let me just focus on just me and my clients for right now, people who work with me one-on-one and then people who work with me in groups. And so now I'm back on track, mostly on YouTube, mostly on my Trading View. So if you follow me on my Trading View platform, then you know I come out with content almost every single week. And if you follow me here on YouTube, I've been cranking out a lot more content now to help you guys. And that's what we're doing today. Today, I really wanted to focus on 3 ways on how to make price action trading easier for you. I've been seeing a lot of people struggle with price action and the trading. And even when I talk to people one on one or even in my group, that is one of the first things I realized that people struggle with. And I'm not going to lie, you guys, I struggled with price action for a very long time. And I just could not understand it until I simplified what was on my price chart. And that is what I'm going to be teaching you guys how to do today. So let's go ahead and let's get into the topics of today. So I do want to welcome you guys. I want y'all to know that I am here for y'all. This is not just a typical another analysis session because I believe analysis and teaching are always different. This is really me helping you guys by engaging with you guys, asking y'all questions, and wanting y'all to engage back with me. I am a trader, I am a coach who likes people to talk back because I kind of feel like a lot of traders come in watching videos. A lot of traders come in purchasing courses, but videos cannot talk back to you and courses cannot talk back to you. And so while you have my attention, while you have the attention of me and I'm asking you questions, like I really want y'all to engage with me. Okay. Hey, Miss Joy. Pistol. That's so funny. Hey, Pistol. I like your name. Okay. And so, yeah, so let me tell you guys a little bit about myself if y'all don't know. My name is Shaquan, and I am a forex coach. I have been coaching for over 4 years now, and I love what I do. And like I said, I went through trial and error, even with coaching, because coaches are not perfect. I used to teach a plethora of stuff. Okay, that's like a southern. That's how you know I'm southern, right? The word plethora. But I used to teach support and resistance and trend lines and all these types of things. I used to teach lower time frames with a higher mix of higher time frames until I realized I had to niche down personally. And now I love teaching higher time frames. They just work perfect for me. And they work perfect for the people who want to learn from me. I learned that once I stopped mixing trading styles, I could help people find better success in this market. And I have helped them find better success in the market. I've helped 4 traders go full time in under a year. I've helped traders go be profitable in under a year. I've helped people learn how to trade in under 6 weeks. And that is not an understatement. That is not an underestimation. I literally can help people go from not understanding to understanding in under 6 weeks and even quicker because I realized once you take out the fluff in how you teach people and how I'm talking to you guys, once people are in front of you and they're able to see you do things step by step and you put them in the driver's seat, it kind of got easier for me to teach people. It kind of got easier for me to really get a grasp of how I can simplify things for people to understand, right? I like what Veronica says. She says, hello, your trading strategies has helped me so much. And I'm so glad about that, Veronica. And so I'm hoping I can help even more people. I've even helped a mom go from being a full-time mom to a full-time trader in under a year. And she worked with me for 6 weeks. Then she joined my coaching program and now she's been doing amazing. And so for me, like this is a personal thing for me when it comes to teaching people. Once I learned to stop teaching what everybody else teaches and to do it oppositely, you guys, it just got better. And so this is where we begin together. I'm going to ask you guys this simple question. What role do you think price action plays in your decision making? I want everyone who's on here to comment for me, okay? Because like I said, the way I engage with you, the way I help you is by asking you questions and then by you answering the questions. Okay, so what role do you think price action plays in your decision making? Because as you guys are answering that question for me, I'm going to go ahead and continue with the presentation or the topic for the day, because I'm probably going to answer the question as I'm teaching you. Okay. Now, when it came to me understanding price action in the beginning of my trading career, I had no idea really what price action was. I was not taught what price action was. I was only taught strategy and to build a system. That was really it. I wasn't taught how it moves. I wasn't taught the difference between the open and the closed prices. I wasn't taught the difference between buyers and sellers. I was really kind of taught from a left brain perspective, meaning an analytical or a methodological, I can never get a word out, a methodological way of trading. There was really no creativeness in it unless it was to really build out the strategy of how to trade. And so when I first started, I was using indicators and all these things that was absent of what price action really meant. Hey V, what's going on, mama? And so I think one of the best ways to understand what price action is to separate the words. So price action, I want you guys to think about the word price for a second, especially when it pertains to the forex market. Price is the amount a person or a business is willing to exchange their currency. And so this is now us making that connection with what it is that we're trading. What does price mean? We have prices. Like if you think about it, in every individual country, they have a price, they have a currency. And so how much is that currency worth and who is willing to buy it? Now, there is a word for that. And this is one of my favorite questions that I ask anyone who works with me. What is another word for price, or what is the word in based on the definition? What is the words in which we do? What do we do? How do we know what people are willing to buy one price for another for? And that is called an exchange rate. And if you guys don't know that, I want y'all to write this down, because we literally trade what banks do, the actions that they take with their consumers and with their customers. Okay. And so an exchange rate is basically a transaction. When I worked overseas, I worked in Germany, I worked in a bank overseas. It was called Community Bank. It was on an American installation because I am a military wife. And so basically when people came in to the bank, they had American dollars. Okay. And so when they had the American dollars, I had euro or I had pounds. I had to exchange their dollar for whatever currency they needed that we kept in our bank. Okay. So once again, that is called an exchange rate. They exchanged their dollar at a price. And so if you didn't know, that's what banks can literally do for you. We're trading those transactions. So I want you guys to remember that. So if you ever had to go across seas and you needed to use a different type of currency, that's the currency that you are going to be using. Okay. Now, the exchange rate, that's what we call it. Okay. And basically the way you guys are analyzing this is by price action candlesticks. So when you're looking on your price chart and you're looking at those green candlesticks and those red candlesticks, that's exactly how we're analyzing the exchange rates. And this is going to vary per trader because it also has to do with your time frames as well, but that's a whole nother topic and a whole nother lesson. But it really is important for you guys to understand what your candlesticks do. They're not just green and red candlesticks. They're not just opening at one price and closing at another price. These are actual buyers and sellers. Once again, go back to the definition of price in the forex market. How much is a person willing to buy one currency for another or even sell it? How much is a business willing to exchange one currency for another? Every single day, when you're looking at those candlesticks, you're looking at transactions that real people are actually making, and you're a part of it. And so I want you to remember that you have to put yourself in this. And the way you guys are going to look at this, and we're going to go even deeper today, is by the vertical axis of your price chart. And that is called your price scale. So you are looking at that every single day. Now, I'm going to help you guys connect with that today, because there may be some things that you didn't even see on your price chart, especially if you're using TradingView, that you did not know could help you. And that's why we're doing this lesson today. Now, your job as the trader, and I want you to get this into your heart. Your job is to trade the increase or the decrease of the price a person or a business is willing to make the exchange for. So you have to make a connection. One of the things that I've realized a lot of traders don't do, and this is a really important connection, okay? They have no idea how to read a currency pair alone outside of those green and red candlesticks. They have no idea what they're actually trading. They have no idea of how a currency actually looks. If I asked any of you guys here, what does an Australian dollar look like? Could you tell me? What does a Canadian dollar look like? Could you tell me? What does a pound look like? What does a euro look like outside of your own currency? Could you tell me what it looks like? Because if you cannot, you've not made that first connection with what you actually trade in this market. You're actually trading something that is blind, something that is intangible, but it is tangible to somebody. I live in America. I use a United States dollar. I can see it if I get it out of my bank, or I can see it technically in numbers if I'm using my debit or my credit card when I'm making a transaction. So it could be tangible via a card or via my money from a bank or from an ATM. If y'all have no idea what that looks like, I need you first, before you do anything else today, is go research how these currencies look, especially if you're trading Euro USD, Pound USD, any major currency pair. Go look to see what that looks like. Make the first connection, because I wish someone told me that. Now, what I also want you guys to comment, if you can, is what don't you know about price action? What don't you know? Okay. I don't know if who you guys are learning from. Let me just say that first. I don't know if you're learning from YouTube. Obviously, we're on YouTube now. I don't know if you're learning from a course, a book, or whatsoever have you. But when you're learning, does the person who you're learning from know what you know about price action or what you don't? Do they know what you struggle with? And here's why I'm asking these questions. A lot of people who come to me say, Shaquan, I don't know how to enter a trade, or I don't know how to exit a trade. You don't have an entry and an exit problem. You have a price action problem. You have a connection problem. The entry and the exit is one of the last things that a lot of traders do. Okay. And so let me get back on track here for my YouTube people really quick. Okay. So an entry is one of the last problems that you have. One of the biggest problems that people have when it comes to them trading is they don't understand how to articulate what it is that they see on a price chart, or how to articulate the problem that they have. And so when I come to a lot of people, I say, you know what? That's not your problem. I guarantee you know how to enter a trade. And it's not about marking up your chart. It's first understanding what price action does for you. Okay. And so, and I like what Veronica just said, and thank you for coming. And she said, how to determine your activation zones. And I want you to go deeper with that. What is an activation zone in regards to price action? What does that have to do with price action? Let's go deeper there, Veronica. Suki says patterns don't seem to work. Why don't patterns work? Like, I want you to go deeper with that. How does a pattern relate to price action? Anything y'all say, I want y'all to dig deeper. Give me more words in your own words. What does that mean to you? Because that is very important, okay? Now, let's just look at the price chart by itself. So we are on Euro USD. This is the daily time frame. And y'all can tell it's the daily time frame in Euro USD because I have it implanted in my background. If you did not know, you can actually put watermarks on your TradingView background just like this. If you go to your settings, and then I believe it's appearance, and then you click on watermark, you can have a watermark just like this, and you can change the color, make it as bright as you want or not as bright as you want. But what I want you guys to look at on my price scale is where it says USD in the top right hand corner. Do you guys see that? When you're trading, when you're looking at your price chart, that is literally telling you the quote currency. You have two currencies, okay? You have a base and the quote, Euro USD, okay? So Euro is called the base. It's the first currency in the currency pair. United States dollar or USD in this example is the currency that's being exchanged. So, how much would it cost someone who uses the American dollar to buy €1? That is what you're trading. These are the numbers you're trading. So, a lot of people say, well, I'm trading the euro against the dollar. Not necessarily. What you're trading is how much would it cost someone who uses the dollar to purchase €1. That is what you're trading. So, let me give an example of this. Okay. Now, this is from last week. This is how price closed last week on Euro USD. At one point, the United States dollar was trading at a $0.04265. So if I wanted to buy €1 at that time, it would have cost me $1.04 if I rounded it off, or a $0.04265. Okay. So when you're making a purchase or when you're making a transaction via trading, once again, your job is to see if you should be the seller or if you should be the buyer based on if price is increasing or decreasing. But you first have to understand how to read that independently of a red candlestick, a bearish candlestick, entering, exiting, whatever. You got to know how to read that on your price chart. This can be the same for pound AUD. How much is it going to cost in Australian for a person who uses the Australian dollar to buy £1? The same can be said for New Zealand dollar CAD. How much will it cost a person who uses the Canadian dollar to purchase one New Zealand dollar? Once again, go look to see how the currency pair looks and start to make this connection that you're trading real money. These are exchange rates. There is a price tag attached to what you're trading. Okay. Now, how do I determine estimation zones for entering? You got to understand this first. If you don't understand this first, my estimation zones won't work for you because I'm trying to teach you connection. I get asked that a lot. But if you skip steps, which we're going to talk about here, the estimation zones that I trade won't matter. Because if you don't understand the time frames to use it on, if you don't understand how to read trend, if you don't understand the four price action candlesticks I use, the zone won't matter. I promise you guys. We don't skip steps when I teach. I promise you, okay? I love your teaching. Thank you. I appreciate that. Now, let's talk about this in more detail. Let's go more in depth. Euro USD, let's break the currency name down first because it still revolves around price action, okay? So, European euro, the American dollar. The person who lives in the United States is the buyer of the euro. This is not opposite. This is not opposite. Another name for an exchange rate is conversion rate. Okay, that's another name for it. I'm glad you answering that question, ain't for real. I'm glad you're answering that question. I love it. Okay, so you have the euro. Anytime you look at a currency pair, the first currency is always equal to 1. So it could be euro USD. Euro is equal to 1. Pound USD. The pound is equal to 1. Euro CAD. The euro is equal to 1. The only number that changes based on the price scale is where price is trading at the moment. Okay, that number is the one that changes. So based on what I just asked here, B says she just got stopped out of that pair. We'll talk about that because I want to know why you got stopped out. I want to know. As a matter of fact, B, put that in the comment. Why did you get stopped out? Let's talk about that. Okay, so is it more expensive? Is it cheaper or more expensive to purchase the euro? I want you guys to comment. Okay, I can see aim for real or aim real just commented that. But is it expensive or cheaper? Let's talk about it. Based on this detail alone. Okay. So it's probably a lag, and I know you guys are probably commenting on that. So we're gonna talk about it here. Okay. Veronica says expensive. Wayne says 4 cents more. Yep. Okay. And it is more expensive. I want you guys to think about this right now. Just think about it right now. In the real world, is it cheaper to purchase the euro or is it still more expensive? Answer that now, because now we're going to put ourselves in the customer view. Let's make that connection once again. Is it cheaper to buy the euro as a consumer or a customer, or is it more expensive? This about to be a good conversation really quick. Are you welcome all the way from India? You're welcome. Had to have my coffee, y'all. Let's talk about it. Is it cheaper or more expensive? It's cheaper. I want to say your first name, I really do, but I'm not going to. Mr. D. Let's call you Mr. D, okay? Mr. D says that it's cheaper. Aim Real still says it's expensive. Let's go back to the price chart and let's look at it, okay? So I'm going to go backwards. I want you to see where price just came from. Let's look at that. Price was trading around $1.07. Okay, this is why the price chart is so important and reading these candlesticks are important, okay? A month ago, price was trading at $1.07. Now it's under $1.04. So it is cheaper. It is 3 cents cheaper to purchase the euro as the consumer or as the customer. It is cheaper. And we're going to talk about that in a little bit. Okay? It is cheaper. Would you rather, I want you to think about it. Would you rather purchase the euro at $1.07 or $1.04? And it's even cheaper today because price just dropped. The dollar just went back up. So price just dropped. It's even cheaper. Okay? Now, as a trader, I want you to think about this. Okay? Yes, it's 4 cents more if you look at it on the dollar term. If you look at it numerically, it is 4 cents. It is 4 cents expensive. But as the consumer, as the trader, you should be selling this information. This is information that you sell. If it dropped from $1.07 to $1.04, that's 3 cents cheaper. Okay? So as the trader, I would not be trying to buy that information. And we're going to break down more of why this is important. Okay? Now, you have to study price action candlesticks because they're the visual evidence of every decision that you are going to be making. Okay? They're the visual evidence. So let's break that down even more. Now, I want you to comment this as well. How important is it for you to simplify your understanding of price action? Like, what would it mean to you if you could simplify this? That's what I want to know for you. Because if you're having a hard time understanding price action, like what is like the priority? Is it top priority? Is it the least, like is it least priority? Like what is it for you? Okay? So let's do three clarities. I like to do three C's here. My favorite number is three, you guys. I'm a triplet. And so I love everything that comes into threes. Okay? Now, we got to break down what does a candlestick do? Like what does it what is it to you? What is it when you're looking at a price chart? Okay? But I want to first ask you this. How many candle formations do you need to know? Like that's what I want to know. How many candlestick formations do you think you need to know? That's an important question as well. I've been trading for some time now, for 6 years now. And I remember about year two, there was this, and it's still this way, which is mind-boggling. There was a chart that goes around. You can find it on Pinterest, Instagram, YouTube, all of this, with at least over 20 candlestick formations. And I remember looking at it. I remember I even bought Naked Trader. I bought the Candlestick Bible. I mean, there's so many candlestick formations with different names, right? And I was trying to learn all of the Morning Star, Evening Star, Shooting Star, Kangaroo Tail, the Dragon. I mean, it was so many. And I remember one day I was just sitting there looking at it because I had printed it out and I was looking at it in my hand. And I said, if you took the last candlestick away, because it's normally three candlesticks you look at, like if price was bullish, you got the first bullish candlestick, the middle candlestick, then the red candlestick, then you enter. If price was bearish, I think I just said that backwards. If it's bearish, you got the green candlestick, middle candlestick, bearish candlestick, you sell. And then if it's bullish, you have the red candlestick, middle candlestick, green candlestick, then you enter. And in my mind, I say, if you take away that third candlestick, the first candlestick, the middle candlestick was the one you should really enter on. And I started to back test this. I had a theory about this. I said, let me go back and back test this. Let me see if my theory works. And it started to work because I realized at the third candlestick, you're chasing price. At the third candlestick, there's no guarantee you'll have a better risk to reward than that middle candlestick. And so for me, I started to focus on 4 candlesticks, but I put all of those candlesticks that was on that chart into categories, right? And that's another lesson. And I'm glad I know y'all watch me because y'all are like 4 per your YouTube videos. You said 4, there are 4, and there are 4. Okay, there are 4 candlesticks that you should know. You should not know every candlestick. It's like trying to learn everyone's name in this world. You ain't gonna do it. Okay, so when it comes to the market, and this is why I say 4, candlesticks moves in groups. It's like us. We move in groups of or pairs or lines. That's how we move. And collectively we go one way. I want you to think about a car on a street. Like if you think about a number of cars, it's either going up or it's going down. None of our cars move sideways. So I want you guys to always think about it like this. Collectively though, are we going up a street or down the street? And I want you to think about price like that. Collectively, is price going up or is price going down? Okay. Because price is literally a roadmap. So if you take a group of red and green candlesticks and they're moving in one direction, no matter the colors really don't matter. So if they're moving up, collectively, price is increasing. But collectively, if these candlesticks are moving down, price is decreasing. And this is called a fluctuation. A lot of times when it comes to price action candlesticks, a lot of new traders or struggling traders try to pick every candlestick apart. I say, no, 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 no. Don't look at every individual candlestick. Look at these as pairs or groups of candlesticks that you need to give you a whole picture. Okay? Because that part is very important. Now, one thing I will say, one of the best tips I can give you when it comes to your candlesticks is it's best to focus on the highs and the lows of price movement. Remember those fluctuations that I'm talking about as the candlesticks go up as a whole and then they start to go down. You really want to focus on price as fluctuations at those really highs, and you can tell it's a high because where's the very highest wick at, and then price just drops, and then you get all these candlesticks after. Or when price is low and there's a really low wick, and then price just starts to move back up. Those are what you want to focus on. Those candlesticks, those individual candlesticks at the highest peaks and the lowest peaks are really what you want to focus on. You don't want to focus on that full price chart. You don't want to focus on every single candlestick. You really got to focus on the fluctuations. Okay. So here's some examples here, okay, that I'm going to show you guys myself, because there was a trade that I just took, that me and my clients took on Euro Swiss, and we gained over 500 pips on literally just one pair. Okay, literally just holding the trade for a while, we just gained it. And so we're out of the trade now. I think one of my clients is still holding his position down, but we'll talk about that. Okay, so on this price chart, this is Euro Swiss. This is on a weekly time frame. This is where we observe this trade. So there was a high here, but let's start at the low because this is important. Remember the fluctuation. Price went up collectively, then it dropped collectively, then price went up collectively again. Now I'm saying the word collectively for a really good reason. When it comes to your price action candlesticks, remember that it's a body, okay? It has to move together. So the lowest wick was right here before we got this really long bullish candlestick, and then we had this red candlestick, right? And so price went all the way down to 1.02996. That was a low price. As you guys can see, once price made this low wick before it moved up, there are no other candlesticks after. If I drop down to the daily time frame, same wick, it's going to be there. It may be more candles. If I drop down to the 4-hour time frame, same wick, more candles. 1 hour, same wick, more candlesticks. Okay, and there's a reason why I'm saying it like this. Now, price went up to 1.06113. That was the highest price. I'm going to ask a question. As a trader, and hear me well with this question, or let's do it as a consumer. As a consumer, would you rather buy the euro in Swiss? Would you rather buy the euro at $1.02 going towards $1.03 at 1.02996? Or would you rather buy it at the highs at 1.06113? That's 4 cents higher. And I want you guys to answer that for me. Would you rather buy the euro and Swiss franc for a dollar and threes or a dollar and sixes? Okay. Now, the reason why I'm asking this question is because I want you to make a connection again with what it is that you're trading. Okay. You're a consumer, you're a customer of something. You buy things in this real life. You need money. But would you rather buy it at a higher price or would you rather buy it at a lower price? Because there are real people, once again, making real transactions at these exchange rates or at these prices. Okay. Christine said low. Ronna said I would rather purchase at 102s. Wayne says buy the low. Number D says low. Exactly. Now watch this. Price then decreases to 0.99734, 99 cents, or if we round it up, a dollar or a 1 Swiss franc. Okay. Would you rather buy whatever you're going to buy the euro at a dollar and sixes or 99 cents or a dollar? Which one is better? I'm pretty sure most of you guys here are about to say a dollar, right? Or 1 Swiss franc. That's what you're going to say because that's what we like to do. We like to purchase things at discounted prices, and that's how we trade as well. Now, as a trader, what is your next play? Okay, because collectively price decline. Y'all see how we got this bearish candlestick? You can say it's like a bearish spinning top, and then price declines, and then you got this bullish candle down here. You guys notice how price did not go past this low. Let's talk about it. Price did not go past the low. Okay, and what happened was, as a collective, y'all see how price is getting away from 99 cents, right? It's getting away from, or a dollar Swiss franc. It's getting away from the exchange rate. Are you the buyer or are you the seller as a trader? I want everyone here to answer me on that one. I see you guys on Trading View. Thank y'all for commenting. I really appreciate it. And everybody here on YouTube, thank y'all as well. Now, are you the buyer or are you the seller in this example? If I said we're going to trade this together, what's our next play? Let's talk about it. What's your next play and why? Veronica says, I'm the buyer. I cannot pronounce your name, sweetheart, so I'm going to call you Double O. He says that he's the, Veronica says seller. Double O says buyer. Christine says seller. Sylvia says seller. Noma D says seller. Okay. On my trading view, I see buyer. Let's talk about it. You should be the seller. You should sell. Here's why you are the seller. You are the seller because once price made this new low, that says that the sellers have the market because they're driving price away from $1.06 or 106 Swiss francs. This is proving that people don't want to buy, hear me well, the euro over $1.06 because they pushed price down after it went to that highest price. Remember, where are you best seeing the price action candlestick at? Where are you best seeing the buyer and the seller at? You're seeing them at a low, you're seeing them at a high, you're seeing them at a low. Now, here's where I'm about to separate everybody here, okay? Hear me well with this. Hear me well with this, okay? This is why trend is very important. Understanding price action first alone, that these green and red candlesticks do represent buyers and sellers in a collective group. And then second, because this is gonna be a whole nother class. But second, understanding trend at highs and lows. This low is called a lower low because price went lower than the previous price. So now, collectively, even though price is going up, and in our natural minds as humans, what we say is if something is going up, we should buy. If something is going down, we should sell. But that is not the mind you want to have as a trader. As a trader, you want to say collectively with all of these candlesticks and price making a new low because it's like you're putting pieces of a puzzle together. Where is price going to get ready to go? And you're going to hope it can stay below the last highest price because we like discounts in this market. So look what happened next. Okay. Price pushed down. All right. The sellers came back into the market. because they showed you, hey, listen, we just went lower than $1.02. We're showing you we don't want to go back up to this high price. And so what we're going to do is we're going to drop again. This is called a trending market. So to also understand price action is to also understand trend. What is in season? How does price look? How is price moving as a group? And this is why we call trend in the downtrend lower lows and lower highs, and in the uptrend higher highs and higher lows. We're not saying to look at every individual candlestick. That's not what we're saying when we say price action. What we're saying when we mention price action is what is the action that all of these buyers and sellers are taking, and how does that relate to the movement of price at these highs and these low points? If y'all ever seen or noticed all the videos that I teach on, one thing that I don't ever do is focus on individual candles. I don't ever focus on anything in the middle. I am literally focusing on every high peak and every low peak and then naming it and giving it an exchange rate. Because that, and I'm treating like a person, if I'm being honest with you guys, you're a price to me. Like, you guys are doing something at these highs and lows that I need to pay attention to. And if you have a clean chart, a clear chart just like this, you're able to see it. Because now, if y'all notice this wick right here, at the low, there's a wick, okay? Price went lower than 99 cents. And I believe Euro Swiss is still dropping right now. It's still dropping right now. So that continues to let you know that the sellers have control. Now, what we need to do is focus on how to make price work for you. So, with understanding price action, to make it easier for you, you need to put it in the position of making money for you, because that's why we trade. We trade to make money. Remember that trading is a business, and you get to delegate price. You get to tell it if you want it to buy for you or if you want it to sell for you, and then you have to let the trade work in your favor. Okay. Now, one of the things that I've learned, and I had to learn this early, is to trade in one direction, because everything is directional. So here's what I mean. When the price is trending in one direction, you don't have to work hard to trade it. You should be able to see clear highs and clear lows. And what I mean is, if we take and separate everything here, here's how we should see this. And I'm gonna say this in two ways: high, low. Oh, I don't want to go too fast, but we should see a high, a low, a high, a low, a high, and price is still dropping. Okay. And so when you see it as going down collectively, even though these are fluctuations, you have a fluctuation up, fluctuation down. You have a fluctuation up, you have a fluctuation down. You have a fluctuation up, you have a fluctuation down. All of these fluctuations are going in one direction. And it is telling you the direction that you should trade in. It is literally giving you a visual input. It's a visual imprint, and all you have to do is trade it in that direction. Even if price was fluctuating up, a really good pair to look at that right now is actually USD JPY. USD JPY has been making beautiful higher highs and higher lows and higher highs and higher lows on the daily time frame. And if you really look at it, she's telling you, hey, you know what? I think you should be the buyer, because her candlesticks are fluctuating up. And that's how you want to focus on price. So you should be the buyer of USD JPY until she reverses, but you should be buying her, not selling her just because you see a bearish candlestick. Or even if you look at Euro USD, you're not buying just because you see a bullish candlestick. You're getting in on this movement as it's fluctuating. Every curve that you see, focus on the curve that's literally going with the flow of price. Okay, so there are difficulties in this though, because what we're technically talking about, even with price action, when it comes to it, is trend trading itself. And one of the things, or a few things that I find hard with trend trading, especially to a lot of new traders or struggling traders, is there can be impatience on waiting on pullbacks. You kind of feel like you need to be in the trade, right? So, for example, like if you, let's just say Euro USD, because I seen B put this in the chat, and I'm so glad you put this. Okay, Because and I'm so glad you were truthful about this. She said, I know the overall trend is down. I tried to take a quick pullback to the upside, and as y'all can see, Euro USD has dropped, right? So that's impatiently waiting for price to pull back in your favor to actually enter into another sale. Okay. The urge to counter trend trade as well. Okay. Counter trend trading just means that you're going to trade opposite of the trend. And this is where a lot of traders get tripped up. They want to just force the trade, be in the trade so bad, but if you focus on the currency pairs that are trending, you won't get tripped up as often. Is that to say that you won't lose when you're trend trading? But if you're focusing on the natural flow of price, then you're gonna make more money than you do when you're countering. Because countering is like false moves a lot. Okay. One of the biggest things that a lot of traders mess up on is trying to read price action on too many time frames. Okay. I consult with at least 3 to 5 traders a week, new traders a week. And one of the things that I've learned that they do is they're using too many time frames because they're not sticking to the true trading style in the range in which they should be trading. I will give you guys an example. I am a swing trader. So for me, I love higher time frames, monthly, weekly, daily. It makes sense because I'm going to hold a trade. I'm looking for bigger movements in this market. I'm not looking for 5 pips. I'm not looking for 10 pip trades. I'm looking for 100 pip trades, 200 pip trades, 300 pip trades, which means the 5 minute won't do anything for me. The 10 minute, the 30 minute, the 1 hour won't do anything for me with my analysis, because if I go too down in those time frames to focus on price action, it's going to force me to cut my trade short. But if I'm focused on the higher time frames, I'm looking at bigger fluctuations. It's like going to a beach. When you first go into the beach and you first walk into the sand, you're not getting the big waves. You're getting the smaller waves as they come up on the sand, right? But the further you go, the more out in the water you get, you're going to get those bigger waves. And so as a trader, you got to ask yourself, what time frames will suit my needs for reading price action and understanding what I need to do in order to catch the trades that I want to catch. Okay? You're either going to catch a small wave or you're going to catch a big wave or something in between. But also, too, one of the difficulties is trying to trade every candlestick and not the trend itself. Price action is people, is businesses, okay? People who are exchanging one currency for another or doing business with one country to another. You got to focus on what they're doing and follow with them, okay? Now, I forgot an excuse, a typo in this, but price action allows you to see what the sellers and the buyers are thinking. Remember that it's a visual representation. Now, you can profit from their decision making. Y'all, there is nothing you need to do to make the market move up or down. There's like literally nothing you have to do. Price is going to go up by itself. It's going to go down by itself. The only thing you have to do is make a trading decision based on what the candlesticks as a whole are doing. And you get to be in control of where you store part of your capital. For example, I've not stored none of my money in Euro USD this year. And that is so crazy. I've barely traded that pair. But I've traded AUD USD a lot this year. I've traded Euro USD a lot this year. I've traded pound yen. I've traded USD yen most this year. So I'm in control of where I'm going to store my capital, right? And you have a choice of when you can trade as well. But the last thing that any of us need to do is force trades, okay? Now, once again, this is just talking about the clarity of your price charts. Again, you have one decision to make, and that is either you're going to buy or you're going to sell, but it's all in the fluctuations. Once again, once you see the overall direction that your price action candlesticks as a whole are going, keep trading in that direction and make that trading decision. Just make one decision. Don't put yourself in the position to make too many trading decisions. Okay. Now, last but not least, for our last and third clarity is wait for the price action candlestick to close. Y'all, I'm about to be a little vulgar here. Just a little bit. Okay. Everyone here should like to finish in their intimate moments. Okay. If you don't finish, you may not feel good, right? Or you're still excited, or you're still waiting for that big O, right? I think that a candlestick is just like that, right? Anything before it is just premature, okay? And I like to relate trading with different things, but that's how I feel about open candlesticks. I remember when I first started trading, I was a scalper and a day trader at that time. And I would look at the 1 hour time frame. You guys, I could not stand the first 30 minutes of a candlestick because I felt like the way it started was never the way it finished. And a lot of times I would try to enter the trade and be fancy and stuff. I'm like, oh, this a bullish candlestick. I'm gonna go ahead and buy, only for the candle to close bearish. And I hope I'm not the only one who has ever done that. I pray I'm not the only one who's ever done that, but it will just always have me feeling antsy. And so what I learned to do just to get better satisfaction was to just wait for the candlestick to close. Just wait for it to close, get more satisfaction, because maybe I need to hold a trade longer, or maybe I don't need to enter at that time, so I can keep going and waiting for price to, kind of form and show me what it wants to do and where it wants to go before I enter a trade. And so if you're one of those people who have been entering trades too early because you're anticipating what the candle could be and you don't really know, you're going to really struggle with trading price. I've had a lot of people ask me that one question, Shaquan, should I wait for the price action candlestick to close? And the answer is always yes. Okay. Now, this is going back into the 500 pip move that I caught. So we analyzed it on the daily time frame. We caught the weekly time frame. We caught the trade on the daily time frame. Okay, the risk to reward was 127 pips to 511 pips, so it's a 1-to-4 risk to reward. Now there was a few things that we had to do here, and I really want to explain it here because we're talking about price action. One of the first things that we had to do, because we're going back into clarity, I really needed to focus on what the candlesticks were trying to show me. And it was that price was in a downtrend. Okay. We had our high, we had our low, and I didn't want to see price go above that high at 106s. I really didn't want to. So, of course, my estimation zones, right? So, I understood where I would place my stop loss. I understood where I would place my take profit because that's a part of price action as well. And then once we dropped down to the daily time frame, I believe there was a spinning top, and we entered. And guess what? I didn't analyze this first. My clients analyzed this first. They said, Shaquan, look at Euro Swiss because we believe it's about to go down. It's about to drop. And my technique is called TMP. So they're using my TMP blueprint. Like, Shaquan, we believe it's about to drop. This is a trade that we could get in. And I looked at it. It took me 5 seconds to say, let's go for it. Because when you have something and you know you got something and you know you see it, you don't want to hesitate on it. You want to strike, right? If the sellers are telling you it's time to sell, if the sellers are telling you it's time to be in the trade, you need to get into the trade. Once again, going back to that price charts that we talked about with the 20 candlesticks, the last candlestick, the third candlestick, is the one that makes you chase price. So one of the things that I don't like to tell people to do is chase price. I tell them, listen, the moment you get your entry candlestick, the moment you see the candlestick that tells you to enter, you need to enter. Don't wait for the next one. Enter. Because if you wait for the next one, you may deem it as too late. And in your eyes and in your mind, the setup is not valid. A lot of times, your first guessing, your first feeling, your first gut feeling is always right. And that is something that you want to always, always, always follow. So let's be clear on these 3 price action rules for the clarity statements, okay? You need to understand, what does the candlestick do? All right, the candlestick works for us, and I want y'all to remember that as well. And always wait for it to close. All right, so this is the end of it. Okay, this is the end of it, and I'm going to answer some questions here, but I wanted to tell you guys about what we do and what we're doing this month in my coaching program. Okay, so every single week, every single Wednesday, I get with my students and we literally back test together. Now, I don't know if y'all back test or not, but I am a really believer in back testing more than you trade, okay? Because back testing is how you know what's working, it's not working. and you get to eliminate the pressure of trying to make money. All right. I don't like the pressure of trying to make money all the time. Trading is already stressful. But what I like to do is back test my system and my techniques amongst different pairs every single month. And that's what we're doing this month. We've been doing it for the last month now. So one thing about it is, this month, what we're doing is we're back testing euro pound and pound USD simultaneously, meaning at the same time. So I'll have like pound USD on this chart, euro pound on this chart, same time frames, and we're going back in time, and we use bar replay, meaning we erase all the candlesticks and we just back test it for, we trade it forward, right? So July 6th, which is tomorrow, we're going to be back testing pending orders and reversals. If you don't know what a pending order is, it's just an automatic trade, or you're setting up an automatic trade so you don't have to trade yourself, right? And the reversal is basically when trend changes. So we're getting to that point where price is about to change this trend. And I'm showing them how to trade on, or how to trade reversals on different time frames. So that's going to be interesting. Next Wednesday, still the same currency pairs, I'm going to be talking about the secrets of trading in tough market conditions. So if you're a person who don't know what conditions are, I think about it like the weather. Like it's either raining, it's sunny, it's cold, it's warm, whatever the case may be. Your trend goes through conditions as well. And so we're about to go into a tough market condition. We're actually in tough market conditions now on some currency pairs in real time. But what do you do when your currency pair is in a tough market condition? And so that's something that we're doing there. And then July 20th, we're going to talk about how to bounce back from tough trading weeks. And then July 27th is Mindset Matters with Sydney. She's one, oh my God, I got to brag on Sydney. She worked with me for 6 weeks. She was a full-time mom, and I helped her turn into a full-time trader in under a year, you guys. I'm really proud of her. Matter of fact, we're starting a podcast together called Forex Moms, and it's really, really going to be amazing. But this is one of the things that we're doing in my coaching program. It's not streamed live. I do record it with my clients, but this is one of the things where you have to join the coaching group to be in it, because we go through a lot of work in this. Okay. But if that is something that you guys want to do, if you say, Shaquan, I really want to work with you, I really want to know how you're looking at your estimation zones, because this is a process I have to teach. I can tell you how to set the zone, but still without the steps, you guys, and without the visual aid, and you back testing this, it still won't work, right? And that's with anything that you're doing, especially if you're still struggling with price action right now till this day. You got to go through processes. So someone has to literally pinpoint what you need to do in your own language. That's important as well. I kind of love getting to take my time with my clients and really speak in how they learn. I can speak to every individual I teach because I know them personally. And that's what I'm saying. The course isn't going to talk back to you, and the video isn't going to talk back to you. People need, your coach has to get into your mind to be able to really bring out the best trader in you. And so if that's something that you guys are wanting to do and you want to work with me, I'm only accepting 5 clients this month because it's July. I've been having fun this summer. Okay. I've been letting my trades run. I've been having fun. I'm not slowing down this month. Okay. But what we do is we go through 3 weeks of strategy. So in 3 weeks, or 3 hours in this case, I am literally teaching you how to trade my TMP strategy. And we also go through risk management training. And then 2 weeks of analysis and watch list building. I literally help you build and construct a brand new watch list for 2 weeks straight, because you have to trade with me. What's the point in learning if you don't get to trade with your coach? So you get to trade with me. And then the last week is trading plans. Some of y'all here may not have trading plans. Say it again. You may not have a trading plan, and you need a trading plan. A trading plan tells you what to do, how to do it, what time frames, when to enter, how to exit, how to improve, everything, right? So y'all need that. And the add-on is, after our 6 weeks, you get to join the group coaching program, so y'all can be in classes like this that I just mentioned. When I do these live streams, I do them for free because I know people need help. I like to give visual aid. I like to give verbal aids. But when it really does come to really working with a coach one-on-one or in the group, that's when the real work begins. And so I like to work with people behind the scenes who really want the real work, who are really going to put in the effort in the work. Okay. But what I'm going to do now is answer some questions for you guys before we go. So, what questions do y'all have, right? Because I want to go back up to what we talked about earlier. If you have a question, you could comment it down below. All right. I keep getting the question about my estimation zones. I'll answer that in a second. But Veronica asked earlier how to know when with price action is how to know when it's the best time to enter the trade. So I'm not in much drawdown before price goes into profit or in my direction. So I'm going to answer this one in two parts. Number one, no one can avoid drawdown. No one gets to avoid drawdown. Okay. And one of the reasons why I say no one gets to avoid drawdown is because once again, we don't move the market. None of us is in control of the market. You have to understand what drawdown is, and it has nothing to do with your zones, your trend lines, or anything. It has everything to do with what people believe price is doing as far as the consumer and the customer and so forth. The only thing you can do is control how you enter. And so you're asking yourself, when is the best time to enter? It's not about the best time to enter, it's about you being there to see your entry. And this has to go with time frames again. What is the best time frame that you can enter on? Is it the daily? Is it the 4 hour? Is it the 1 hour? And are you present to enter? So this goes into once again the steps again of how you place trades. Okay, this is what this goes into. Number one, this is going to go into trend. When you're focusing on your trend in the direction you want to trade, you first have to establish on what time frame you're going to look at your trend on. Next, once you do that, you're going to focus on where you're going to enter the trade. So before we talk about the time, where are you entering the trade? Then you're going to focus on being patient enough to wait for price to come to you where you plan to enter the trade. Last but not least is the time frame. Okay. So let's just say price is near where you want to enter the trade. I'm trying to see where you are. Are you at work? Are you at home? Like, do you have a demanding schedule? Do you have a flexible schedule? Because your time frames tell you when to show up, right? So let's just say that price is where you want to enter the trade. If you enter, and this is now about to go into mindset, if you enter on a 5 minute time frame, that means once price reaches where you want to enter the trade, you got between a 5 to 10 minute window to enter that trade because you're entering on such a low time frame. So you have to be there very quickly. It's not a matter of when that happens. You just got to be there. Okay. Let's say you enter on the 1 hour time frame. A 1 hour candlestick closes within an hour. So you got literally between a 1 to 2 hour window, and I'm just talking about averages here, a 1 to 2 hour window to enter a trade. Because let's say let's say you're selling. The first candlestick that appears into your structure, whatever you're using, is bullish, but you're trying to sell. Your next candlestick could be bearish. So now you got to wait another hour to see if price is going to be bearish. Are you there for that hour? Right? Then the next thing you got to focus on, if it's the 4 hour or the daily, it's literally the same process. But now what you're also focused on, if time is an issue for you, if you do have a demanding schedule, are you going to enter in the trade manually? Because you could be missing trades because of your demanding schedule. Or are you going to set a pending order? And this is one of the reasons why I teach my people differences between manually entering trades and pending orders. I don't always like to be at my price chart, but one thing I will do is set a pending order if I know I'm going to have a really busy week or month, or if I know, listen, I may not be able to make it to this price chart because price is really close to my zone. I don't want to miss out. And so I'm going to set a pending order and let the trade work for me versus me trying to force the trade myself with limited time because I really need to focus on this entry. Your entry should take 2 to 3 minutes, right? Meaning how long it takes you to enter the trade with everything. It should actually take less than that. You just click and buy and sell and you take profit and stop loss, right? So that's really it. Okay. So that's one. Veronica also said, I also have a challenge when price is in between the high and the low. Let's talk about that. What is the challenge? Like, what's the challenge between price being in between the high and the low? I would really like to know that. But it breaks the high, then width, but turns around and goes the opposite direction. Okay, that's two different things. Okay, because I want to know what's the struggle between the high and the low. And then what I want to know is if it breaks the high, then wicks, are you saying that it breaks the high, then it drops back down in your favor or goes the opposite way? Because that's a false breakout, or what my friend calls it, a false pump fake. Pump fake. Okay. So we got to think about that. All right. Um, If you're still on, I would love to talk to you about that. Let's go back to B when she talked about she was in a buy on Euro USD, then she got stopped out. I'm glad she was open and honest about that. I think it's very, I think we should always be transparent about our losses, right? Like I'm in drawdown on two currency pairs right now. Got a very great month. Like June was a really good month of trading for me. Now I'm in drawdown on two currency pairs. One trade is in profit, right? I don't know if I'm gonna get stopped out, but we got a lot of momentum in this market already in July. I was not expecting that. No, never do I expect it. But when it comes to losing, we got to be even more transparent. And we got to call out why we lost. And she did call it out. She said, Shaquan, I was looking for a quick buy to the upside, even though she knew price was bearish. So I commend you for that, B. Okay. That just basically says beware of your counters. Your weekly and your monthly are too strong of a downtrend to try to buy. It's too strong. So you really want to stick to your sales. Okay. Um, Karen says, I need clarity. It's a block for me to simply understand base and quote. All right. Let's say you have a list of currency pairs in your watch list, right? Let's just say the majors: Euro USD, Pound USD, USD Swiss, USD JPY. A pair means two. You need two currency pairs together. Euro USD is one pair. Two currencies, Euro and USD. Pound USD, two currencies. It's a pair. You have the pound and then you have USD. The euro, the pound within the euro USD and the pound USD, the euro and the pound are first. They're the first named currency. That's the base. It just means first currency. It's the first thing you see. The United States dollar is the second currency. It's just the second name of the currency pair. It's the second currency that you see. The first currency, the base currency, is always equal to the number one, like a dollar or 1 euro or 1 pound. You're trying to see how much does it cost the other quote, the other pair or the other people to buy the first currency. That's it. That's base and that's quote. Okay. That's the clarity there. I hope that clarifies it. Okay. Let's go here. Can you do live analysis? I do live analysis literally all the time. If y'all go through my YouTube channel is filled with currency pairs before they move. Literally, if you follow me on TradingView, I'm always giving out analysis before moves happen. Every single Sunday, I get with my students and we literally break down a watch list before moves happen. Okay, every single Sunday, that's what my clients. Because what we're doing now is we're literally creating new watch lists every single week, and we're going through section by section by section. It's like 6 to 7 sections of currency pairs, and we're putting them together and we're saying which ones are the best to trade out of every section. Literally, it takes about 2 hours, at least an hour and a half to 2 hours to do, because we're literally breaking it down. So I'm showing them how to construct a watch list every week from scratch. One of the best things that we've done so far. Okay. But yeah, just go through my YouTube channel. I do live analysis all the time. It's just pre-recorded, but it's still live. How do you determine estimation zones using price action? I'm about to say it's so simple. I say it's so simple all the time. I don't use higher highs and lower lows. I use higher lows in an uptrend. That's a discounted price. And lower highs in an uptrend. Literally, I just use those. That's it. I can't say it even more simple than that. And it's opposite than support and resistance traders. Support and resistance traders use higher highs, meaning once price passes the higher high, they're looking for price to come back down to touch the higher high and push back up. I don't do that. What I do is I take the higher low, and I need price, if it's in an uptrend, to stay above the higher low. And if it proves it can stay above the higher low where I'm going to put my zone, I buy. And it's just opposite in a downtrend. I promise that's just that simple. And it's just based on the concept of supply and demand. Okay? That's literally it. Someone says beware of scammers. Always beware of scammers. That's why when people work with me, I don't work with people who I don't talk to. If you didn't get a video call from me, like we're actually video chatting, like how we're talking, you didn't talk to me, you talked to a scammer. I literally, before anyone makes a transaction with me, before I work with anybody, before you give me money to work with you, before I process anything for you, before I do any type of work with you, you literally have to see my face and hear my voice. And I have to see your face and hear your voice. We gotta talk. That's how you avoid scammers, okay? I believe in multiple time frame. I'm on trading looking at these too, you guys. I believe in multiple time frame analysis. Yes. I admire your teaching style. Happy to join. Thank you, Pip Runner. I really do appreciate it, sweetheart. Let's continue. And if y'all have any more questions, y'all please just let me know, okay? How to spot reversals of trend, what to look for. Good question. Once again, let's go by the first one. How to spot a reversal of trend. Once again, you got to look at your higher highs and your higher lows. I'm going to keep it simple. And this is why I only focus on higher lows and lower highs. If price is consistently making higher lows and higher highs, the most important low or high is the higher low. That's the most important one because that's where people are buying from. Keep that in mind. I want y'all to write that down too. Write this down. That's where people are buying from, the higher low. Secondly, once your first or the very last higher low gets pushed past, meaning price made its initial lower low, that's a reversal. That's it. That's in the downtrend. That's how you spot a reversal. It has to happen like that first. Secondly, in a downtrend, lower lows and lower highs. Your most important are lower highs because that's where people are selling from. Okay. Once price passes the most recent lower high, it makes a higher high, the initial first higher high. That's a reversal. That's it. There's nothing you can do to make that happen. That's all you look for. It's not a break of a trend line. It's not a break of support and resistance. It's none of that. It's literally by price alone. That's why having a naked price chart is so beautiful because you can see it and then you get confirmation of what to do after that. That's how you see it. I hope that works. TX, how to know a price has made a single move or multiple moves as price is fluctuating. Oh, okay. So I love asking this question. When me and my clients looking at our price charts, I say, hey, do you think price made one move or two moves? If I can literally take my finger, or I have small fingers, so I don't pick up my fingers, okay? If I can literally take my finger and do this up, down, or down, up, that's more than one move. I call it two moves because it's just two fluctuations, right? But if I only do this going up or this going down, that's one move. That's simple. It's nothing too deep for that one. Okay. Veronica says she works from home. Thank you for letting me know that because that means you may have a flex schedule. Maybe. Christine says, when looking for a pair or pairs to analyze, do you just go through the pairs and see what's trending or how to make a choice? Actually, yeah, that's simple. So what I do is I break my currency pairs down by two things. One is correlation. Two is quote currencies. So what I'll do is I put all my Swiss pairs together. USD Swiss, AUD Swiss, Euro Swiss, Pound Swiss. I don't trade Pound Swiss. I just like to look at it because I have a client who trades it. New Zealand dollar Swiss, all my Swisses, right? This is just an example. And what I do is I go through each one to say, okay, is it trending? Yes or no? No, go to the next one. Is it trending? Yes or no? No, go to the next one. Is it trending? Yes or no? Yes, stop. I stop. And I quickly analyze it, right? Now, I'm not analyzing every time frame. I want y'all to understand that. I look to see, now I always start with the daily first. Is the daily trending? Did it make a new low or a new high? Or is it between a low and a high? Like I'm looking at that, right? And what I'm looking for is to identify my trend. And if I see it's trending, we got something. I analyze it, I set it up, I move it to another watch list, or I color code it. If y'all look at my trading views, y'all will see that I have color like flags on my watch list. So I can quickly go to that color and see all those currency pairs within that color that I need to pay attention to. Okay. So that's one of the ways that I do it. I go through each section, the yens, the New Zealands, the cats. Yeah, I go through those. And once I have the ones that I want to watch for the week, I go back through those again and do the process of elimination. Which ones give me an entry this week? Not next week, not the week after, but this week. Because now my goal is to condense or consolidate those pairs and pick out the best ones I can trade this week. I hope that makes sense. So that's how I look at my watch list because I don't like to look at too much. That's how I do mine. Veronica says, I think you answered the question by saying pay attention to the high candle and the low candle only. I'm confused when price. Oh, okay. This is what I want to get at. If price is moving between your high and your low, Price can still be trending depending on how you look at trend and what you use. Because I use price note tools. This is just a simple tool, right? Y'all seen it in my videos. I just use a price note tool that just says, hey, this is the high, this is the low, this is the exchange rate. Now, when it's between your high and your low, you're trying to understand if you're about to make a trade between that high and that low. Are you selling if it's in a downtrend? Are you buying if it's in a downtrend? Now, it's all about what price is doing between it. If you have an entry, of course, you're going to make a trade, right? But if it's between your high and your low and it's confusing you, it may be, and if it's consolidating, you may not have a position, okay? I'm not doing another video on this one. I'm going to have to show you guys because it's something that I like to help traders understand. If price is lingering between a high and a low, let's just say it's been between the high and low for 2 weeks, 3 weeks, 4 weeks, a month, 2 months. That's consolidation. Don't touch it. It's just meant to confuse you. But when you can see a clear trend, you won't have that question. You know exactly what to do, Veronica. You know exactly what to do. Okay. So we gotta. That's called a trend cycle. And once again, it goes into your market condition. So we'll talk about that a lot later. Okay. And once again, I'm telling y'all, this is why it's important to get with someone, get with a coach who understands these things to really teach you and take out that fluff in between. This is really important because these are things you're not going to see on YouTube. I promise you're not going to see these things on YouTube. Okay. Um, bu- 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 Nobody asks, I like your trading system, thank you, and have watched numerous videos on you trade and taking trades, some based on your analysis to make a profit. How much is the course? So I don't trade, I don't sell courses. I used to sell courses in the beginning, but when I realized people have more questions than what a course can give, I stopped selling courses. What I do is give you access to work with me. There's a difference. I talk back to you. The way that I'm talking now is literally the way I teach, but we're on a price chart. Okay. It's always on a price chart. So to work with me 101, and I'm going to be quite frank for 6 weeks, you guys, and then joining my group is $2,500. Now, that may turn a lot of people off. And I really do understand that. But I want y'all to hear me well and understand something. 6 weeks equals 6 hours. I am literally telling you to wipe away everything you know. And what I'm gonna do in the first 3 weeks is literally teach you how to trade and make your own trading decisions. That's it. I'm putting you in the driver's seat. I'm not teaching you support and resistance. I'm not teaching you because there's thousands of videos. I'm not teaching you trend lines. There's thousands of videos. I'm not teaching you indicators. There's thousands of videos that you can already go watch those. What I'm about to teach you is how to connect to what you trade, how to make your own trading decisions using what I trade. That's so simple. You guys have seen it. You guys have seen me make money. You see me lose some money as well, right? But I am teaching you how to do it on your own within the first 3 hours that we work together, the first 3 weeks that we work together. I'm also teaching you how to use a risk management strategy that would tell you not only when to enter and exit a trade, but how much of your capital to put into every trade that you enter based on your own money, whether it's your own money or prop firm. Because I'm going to teach you how to pass a prop firm too. Okay. But what I'm also doing too is after I teach you the strategy, I'm also teaching you how to build a weekly watch list. How do you know what pairs to go on your watch list? How do you know the difference between fast moving currency pairs and slow moving currency pairs? How do you understand market conditions? How do you understand your profitability? Because your profitability is different per trade. You want to know why your stop loss could be 50 pips in one trade and then maybe 100 in the next one and then maybe 30 in the next one? That's based on your market conditions. Okay. So I'm literally walking you through that and I'm giving you feedback in real time as we go along. And I'm giving you a trading plan. And then I'm giving you access to come into the group to continue work with me with no extra charge, right? And then you continue to back test it with me weekly. You continue to analyze your charts with me and others every single week. You're also getting psychology sessions with us when we do Mindset Matters with Sydney. And so it's not like we're not forever working, right? But for a person to take you from struggling to where you can trade on your own in less than 6 hours is unheard of. And I have a lot of people who I have helped do that. Okay. And so it's 2,500 and there are payment plans available. Yes. Now, there are some times when I let people just come into the group at $197 a month, right? So if you're one of those people where you say, Shaquan, I don't have the 2,500, but I can come in at 197 a month, that's great. The only thing that you don't get is one-on-ones with me. That's it. Okay. But there are videos you can watch in which and how I trade and how I set up my charts and how I do my TMP setup. And then you come and you get everything else that comes along with being in the group. Okay. So that's the price of it. Okay. So I'm glad you asked that question. But yeah, I just don't do courses. I teach everything live. I'm not about to sit here and make all those videos. I already do it for YouTube. I'm not about to sit here and make all those videos. I'm just not gonna do it. Hello, coach. Hey, my bad I came in late, but still got something new from you. Thanks. Oh, you're so welcome because I'm doing these every week now. I'm doing these every single week. Let me answer this question on TradingView really quick. Do you offer broker recommendations? I do. It depends on where you live. So if you're in the United States, I say Owanda because they're regulated. I do prefer regulations. I don't like their leverage, but what I teach my students is having a too high leverage is not good. It's not always good because you're going to risk more money in overtrade. Okay. A lower leverage gets you closer to trading your own cash, your own capital. So sometimes having a lower leverage keeps you in a safe box. Okay. Some people don't like low leverage and I understand it. Sometimes I feel like it holds me back as well. However, because I'm trading with prop firms, I don't really worry about that anymore. Unless I'm trading my own capital still. So if you're going to trade with a prop firm and they're giving you access to tens or hundreds of thousands of dollars, low leverage will work in your favor. You got all that money to trade with. Just use it, right? But if you're trading your own money and you want your own broker, if you're on TradingView, I say Yolanda, okay? If you're overseas like Europe or something, I say IC Markets. I have clients who also use NVFX, Osprey. Is it Osprey? I think it's Osprey. I hope I'm saying that right. And it's another one I can't think of the top of my head, but it's one more. But I like Owanda because I can connect it to TradingView, so that's why I personally like it. So yeah. If you're going to use a prop firm too, I would say FTMO. And then we're just now in the swing trading account if you're a swing trader. And we just got into a new one called Funded Trading Plus. They're a little bit newer, but one of the reasons why I like them, they don't have time limits. So we don't have to worry about the 30 days and the 60 days, and they only have one challenge you got to pass. So it's the experienced trader package. So yeah. So that was that question from TradingView. I'm gonna ask like two more questions. I kind of gotta go, y'all. And I'm glad you guys are enjoying this as well too. So when you say it's trending, you mean it's going in the same direction? The fluctuations are going in the same direction. Like it's like up and down movements going up, or up and down movements going down. So it's like what direction is price fluctuating in overall? Okay. You're welcome, Veronica. You're welcome, Kelly. The monthly candle breakdown is a bit difficult as the chart looks like they are consolidating. How can one make okay? That's a really great question. Probably the last question to end this with, okay? Monthly time frames. First of all, why are you on a monthly? Let's talk about that. Okay. If you're in a monthly time frame because you're swing trading and you want to get a good grasp of how the monthly is moving, you can look at this two ways. You can section it off once again by looking at the highs and the lows of trend. That's one. That's if you're trend trading from the monthly time frame. But then you need the weekly and the daily to enter that trade. Okay. Then number two is okay. I'm teaching my people to do this. When you're looking at the monthly time frame, outside of trend, when you're focused on one monthly candlestick, let's just say we're focusing on the June candlestick. So we got the June candlestick. When you want to break it down, your job is to say, hey, how did the monthly time frame close? Let's just say it closed bearish. I want to use New Zealand dollar CAD, for example. Let's just say it closed bearish because New Zealand dollar CAD is trending on the weekly too. So my job is to say, okay, it just closed bearish. That's it. That's just a monthly. That's it. It just closed bearish. I'm not putting anything on that time frame outside of trend for right now. Okay. I'm going to go down to the weekly. It takes 4 weekly candlesticks to make one monthly candle. I'm about to see how the weekly time frame moves. If it's bearish, more than likely there's 4 bearish candles. Unless it closed with a long wick, then maybe there's like a bearish candle, bullish candle, bearish candle, bullish candle, right? Whatever. So then the next thing that I want to do is say, okay, well, based on the monthly looking this way, bearish, weekly, bearish, my daily, how did price fluctuate for the week? How did it trend? What's those fluctuations look like? Because you can't see the fluctuations from the daily on the monthly. You probably see 20 to 21 candlesticks moving up and down, up and down. You see four bearish candlesticks or four different candlesticks. Then you see one big candlestick. Your job is to break down the fluctuation of the last month's candlestick. Okay. And then try to get in a trade based on that information, based on the previous month. That makes sense? I hope that makes sense. I'm going to take a drink. I hope that makes sense. Okay. Mm. It's the same if you were going from the daily to the 4 hour. It takes 5 days to make one weekly candlestick, right? But to get a really good fluctuation from the daily, depending on the market condition, let's just say it's tight. It's like a narrow, like you're gonna get quick profits. It could take about 10 to 12 candlesticks, right? So, um, let's just say that the daily is trending and it just pushed down, then it pushed up, right? It's just downtrend. If I'm going from the daily to the 4 hour and I put my structure where I want to enter the trade, the 4 hour is only for my entry. It's not for anything else. But now I'm questioning what would it look like for price to get from where it is now to that daily zone where I want to enter the trade. Is the 4 hour pulling back trending, or is the 4 hour pulling back in one move? But I'm still focused on that one zone to enter the trade. All I did was go from the daily to the 4 hour. But it never skews what I'm going to do based on the daily time frame. Once again, that goes into priority trading. What time frame has your priority for trend? What time frame has your priority for entering? I want y'all to remember that. That's another thing I teach. What is the priority? That's why we pair two time frames at a time together as well. Okay. So yeah. Oh, you asked, yes, it does for a start. What is the go deeper with that one? I guess you're saying that it makes it it's making sense, right? Okay, cool. I think that's what you're saying. All right, y'all. So I'm gonna get ready to go. Listen, I'm gonna try to do these once or twice a week. I may come back on this Thursday, depending on my schedule. Cause yeah, I'm a real mumble. I'm a forex mom. Okay, I am a forex mom out here in these streets, and your girl got stuff to do. All right. So make sure you guys are following me here on YouTube. Make sure you guys tell other people about me here on YouTube. If you like my trading style and my teaching style, make sure y'all share. Get your friends invited. Get your trading buddies invited. Get them here too. Also, as well, say, hey, follow Shaquan on TradingView. I go live on TradingView as well. All right. I love you guys. I thank you guys for watching, and I will catch you guys in the next live stream. You guys be blessed. Have a good one.